What's going on, everyone? In this video, I want to talk about the significance about understanding the macro time frame and why so many scalpers fail. Okay, a lot of times, again, and I'm a scalper as well, I scalp about 60% of the trades that I take on the NASDAQ futures. But one thing that I've started to realize a lot lately is that the more you scalp, the more you give back over time. The reason, or the way, I guess I should say, the way to sort of succeed with scalping is to understand that if you are able to identify on small time frames, 1 minute, 2 minute, 5 minute time frames, if you're able to identify a spot where you can get into a trade, take 10 points, 15 points, 20 points with sufficient size, that's going to allow you to walk away from the charts, be a scalper. The truth of the matter is that a lot of traders, a lot of us retail traders, tend to want to find setups on the dot every 5 minutes, every 10 minutes, every hour, on the hour, every hour. We're constantly looking for the next move. We get into a move short, we take some profits, the move continues down, we're looking to reverse it. Move continues down, you get stopped out, and vice versa. A lot of times, we're not really zooming out and looking at the bigger picture. For example, let's take a look at the NASDAQ 100. Let's go back about 4, 5, 6 trading days here, and let's look at the macro view. On this 30-minute time frame, the clear move here is down. Okay, the clear move. Double rejection here at my resistance at 19,085, rejection at my resistance at 18,850, rejection here at 18,680, and rejection here at 18,512. This is clearly staircasing its way down. Truth be told, although there's some fantastic moves to the upside, what you should realistically be doing is telling yourself, I am waiting for the exhaustion to the upside into supply, and I am getting short. I am waiting for exhaustion to the upside. I'm waiting for a lower high to get short. Now, although this seems easier said than done, one way that can make this a little bit easier is to mark out some of these key levels on your charts. Go back 5 days, go back 10 days, start marking out highs, start marking out periods of consolidation, start marking out when we put in a bottom and we start to bounce. Well, where was that top, right? If we are putting in lower highs off of that recently formed high or recently formed top, and you lose an area of support, we want to be short, and we want to be targeting that next area of demand. And the one way that we can kind of manage these type of trades, in my opinion, is to trade micros, and is to give yourself one 30-minute ATR or even 1 hour ATR as a stop loss. So for example, if you look at Thursday's price action, once we lost 18,512 off the bell, well, truth be told, a 1 ATR is sitting between 80 and 90 points. If you were to play 2 micros and give up around $160 for a 1 30-minute ATR for a stop loss, you're essentially going to be giving up around $300 to $325 on this trade. Now, the benefit of this is that can be easily managed even though you're trading prop firms, and your profit is going to be at least 300, 400, maybe even 500, 600 if you're targeting a 2R, 3R. Because the truth of the matter is that charts need room to breathe. And there's a lot of volatility. There's a lot of ups and downs. There's a lot of periods and pockets where the markets are consolidating. And a lot of times you hear traders saying there's a lot of chop, there's a lot of fake outs, there's a lot of, consolidation, this, that, and the other. But when you really zoom out and you look at the chart, and the chart is telling you that we are clearly staircasing to the downside, well, until price action proves to you that it closes over a previous swing high, there is no long position. Every bounce is an opportunity to get short. Every bounce is an opportunity to get short until price action closes above a previous swing high and pulls back and actually consolidates with a hold. Then we can start to say that market structure is starting to shift and we can start playing to the long side. But for the time being right now, as we approach this week, if we continue to put in lower highs. We are looking for short opportunities back down to these ranges, okay? Back down to some of these previous supports. So if you want to stop failing and turning your wheels, spinning your wheels in the mud as a scalper, as a day trader, especially if you're trading prop firms, zoom out, look at the higher time frame, get your macro bias. My macro bias is short. My macro bias is short until we can at least reclaim 18,680, or we can at least reclaim 18,512 at a bare minimum, okay? Because 18,512 was our last swing high, okay? So I need to at least reclaim 18,500, hold, and then show that we are going to push higher, okay? Before I can attempt to go long. Otherwise, if we reclaim 500, we pull back and put in a lower high and lose 500, I want to be 100% short, and I want to be using the previous swing high as a stop. I hope this video helps you guys. If you guys want to trade with me each and every single day live, you want to get access to my course and the rest of my scalping strategies and join the Evolution Traders community, I've dropped the price so everyone can afford to be involved and help the team grow and trade with other traders to get a better perspective and to put yourself in a more consistent spot. At $25 a month, I think that's very affordable to anyone out there. It's cheaper than your 80% off discount for a prop firm. Again, join a community that's going to help you. Find a mentor, find a coach, find a trading buddy inside the room. And again, you're going to have a lot more success. If you guys need evaluation accounts right now, Apex is 80% off. You guys can use code DAnthony. That link can also be found down in the description box below. Until next time, guys, I'll see you guys all in the next video.